So really what I want to see a swing high absolutely formed quickly now that we're reaching into this 15-minute bounce. So it shouldn't hang around here too much. Okay, it's already consolidated through it. Once it trades back into it, if it really wants to gun for a bearish continuation, it'll respect it very quickly, create a swing high, turn away. Okay, very simple. So really what I want to see at a price here should, continuation be valid and hold true. I want to see it get through this down candle here and cement this swing high. And remember, 3-minute chart, you get a little bit more clarity because it's rolling up into a bounce range. So the fact that it's leaving it quickly is definitely a green flag. All right. So yeah, thinking about it here, I want to see it leave it quickly. Like I said, that would obviously cement an intermediate term high. So that'd be bearish market structure beginning to manifest itself. And what you want to see is a displacement following that to be convicted in this old 15-minute low being taken. So you're seeing that we're in the 12 o'clock hour. Okay. We understand this is previous daily low, or sorry, previous hour low, and nothing is targeted more intraday than previous hour low and previous hour high, similar to what we look at for a given daily range with previous daily low and high. So yeah, with that in mind, I got what I wanted here, so I think I'm going to scale in here. I'm going to sell short, I scale in here, put stop above, take profit goes below, okay? So stop loss very reasonably goes above the 15-minute imbalance high. So that's a balanced price range. I'm shorting after the swing high was cemented. Okay. Shorted right at the tick low of this bearish order block, expecting that and anticipating that to hold. And I'll be going for the nearest term sell side liquidity of the bull. So regardless of the outcome of this trade, I'm understanding it's post macro. So macro got the ball rolling. So time is on my side. So what I mean by macro set things in place is it rallied above, took the short term highs going against those who've been already shorting, went up into that 15-minute bounce. Okay, so the macro did its job. Should this be a sell program? And then whenever it comes down into here, we're taking a post macro short. So really, everything that I'm explaining here real time, regardless of the outcome, whether it's the stop loss or the take profit, absolutely everything is coming together here for me to be convicted and taking this short. Okay, and I'm respecting and understanding the risk, which is why I would not be using unreasonable leverage. Okay, like I said, I mean, this is like a little bit ridiculous down here. Could it be, is there scenarios where it could be left intact? Of course, but I just don't, with the, context I'm laying out here, I just don't think that's going to be the case. So a little bit slow movement here from the entry. I'd like to see it really drop down aggressively within the next couple minutes or so, especially since we're already post macro, right? And if what I'm speculating to be true with what the macro did, absolutely time is on my side, even though we are within the lunch macro. But all the volatility we had in the marketplace, that's why I'm keeping this rolling, and we're to be expecting, price to continuously move with that lunch macro. So I need to see Nasdaq find the same traction that ES is right now. Beautiful. There we go. So I don't want to see the stop here. I want to see it like trail down and then roll back up. Okay. If we're going to consolidate, that's fine. I've never had a problem with sitting through them, but if the macro is going to do its due diligence and the post macro is going to clean it up, we'll see this thing, really sharply drop down. Okay, so rallying back up into this bearish order block. Should we disregard this bearish order block, then I'd just look to cut bait and, accept the outcome of the trade. But like I said, I didn't want to see it roll down and then come back up immediately. So this is obviously a short-term consolidation, and we're going to let the market do its thing. So as for ES, we're rallying up into this 1-minute Fairvalue gap, which is certainly reasonable. Okay. And yeah, like I said, like I was originally looking to see if we can get to the hourly gap, but like the fact that it moved this quickly away from it immediately after the hourly opening, like I just, that would allow me to be convicted and not staying open at the moment. Okay, so that's why I'd be shorting with that. So like I said, ES rallying up into this 1-minute gap, which is rather reasonable. Nasdaq simply just retracing up into the bearish order block, so I would expect us to hold and then obviously continuous lower. All right. So another part of risk management is like obviously through experience, it's what it would take, but understanding and knowing when to push a certain amount of leverage versus when to push another amount of leverage, right? So compare and contrast the leverage that I'm using today with the Asian session, right? So you know, being selective with your leverage, never over leveraging, of course, right? So whatever suits your risk management plan, and whatever, you know, you're saying, you're like, for me, I say I never risk more than 1%. So as long as I'm not risking more than 1% on a given trade, okay, depending on the scenario, I'm either going to risk 1%, or typically I'm risking a 0.5%. Okay, and then obviously with the micros, I'm not not risking a lot at all. Okay, and uh, the risk to reward is rather high here, so I'd be risking. Let me do the math here quick. So I'm risking $125, right, for $370. So that is essentially a 1 to 3 risk to reward ratio, which is, you know, what, you know, most people strive for in the first place. So ES is looking a little bit more promising in terms of lower movement, because, you know, obviously we're extending a little bit deeper. Rolled up in this 1 minute gap here, created a swing high. Definitely not the speed that I would want, but all in all, everything, you know, looks perfectly natural and fine at the moment. Now, let's go back to our entry. So let's say price rallies above half of this bearish order block right here. Okay, then at that point, it's time to start like, if it trades above midpoint of this bearish order block, that's the only reason why I would close a trade. Okay, and in any other like context, I would allow it to take this short-term high entirely, right, and have my stop above the high. But in this case here, I sold the bearish order block, and I'm understanding we consolidated through an opposing 15-minute imbalance. So that would be a balanced range. There's not much of a need for it to work back up into it after it's already touched it here and left it. So that's why if it were to trade above midpoint and gun for the bounce price range that second time, okay, I'll just cut bait and, you know, accept the transaction for what it is, and then obviously come back for the PM session. Like, yeah, like I said, everything looks normal and natural. Okay, we're simply just consolidating. Certainly nothing I'm worried about. However, the only subtle red flag that I could consider is the speed that we're having, which, you know, I can't control, you know, when exactly we're gonna have speed. Like, I know that there was likely to be speed post macro, okay, and post macro, I would like to see more than what we're seeing here. So I'd like to see it really lose the floor. I mean, yeah, be that lead. I mean, it all comes down to what you're willing to risk relative to what your account was looking like. So it's different for all of us. So I don't particularly think that stop loss is bad, because I don't think price will retrace up into there. But, you know, my stop loss is where it's at for a very specific reason, which I just explained with the 15-minute bounce range. But yeah, like I said, it all comes down to what your appetite is, what your risk parameters are. As long as you're not risking more than you're willing to lose, given what your account is currently at, then whatever your stop loss is, completely fine and natural. Now, the only thing that's going to make me trail my stop lower, apologies for the background noise you may have heard, but the only thing that made me trail my stop loss down, like if I did that now, that'd just be foolish, because, you know, we're not really particularly having speed, right? But what would make me trail my stop loss down relative to break even, or maybe above a swing high, is if we drop down and touch this bearish order block here, or sorry, bullish order block. And I mean with real speed, not gradually, just slowly. No, I want to see it drop straight down, knifing down right to that bearish order block. As soon as it does that, then I'll trail. But for now, like I said, not particularly getting the movement that, you know, I would absolutely favor. Now, on a 5-minute time frame basis, you can look at it and you see that we roll up. Okay, here's that balance price range delivered. We wick off aggressively, and all we've done is created 5-minute down candles from there after the change of state delivery. So remember, we're selling on this 5-minute order block, right? So that's what this was off the basis of. All right, so there's the drop down that we were looking for. See if this can continue. Okay. So I want to see it really drop down and show an initial disregard of the bullish order block. Then I'll look to trail my stop. Okay, so I'll move it down here. Beautiful. So risk is now $100 for $360. So almost a 1 to 4 risk to reward here. So even if this was a losing trade, like let's say it rolls back up, takes a stop, right? I just understand that the next transaction, if I do the same risk to reward, right, and manage the next trade the same exact way, it's literally going to almost quadruple the loss that I took, right? So if you look at it that way from a long-term perspective, you're not going to allow like, short-term like losses or like one little loss like affect you in the slightest, okay? So very gradual rundown. I mean, I really can't see this thing do anything other than just spike down to the lows here, which is obviously why I'm in the trade here. Like, yes, I could have took this scalp here. That was a very reasonable scalp that that Lee and Brian were all over. By the way, once more, I'll say that you guys managed that perfectly. But anyway, I could have scalped this, but this is like the idea that was kind of just replaying over and over back in my mind, and this is what I'd rather capitalize on rather than, buying it on that. But like I said, very, very reasonable scalp here. Okay, we understand there's a 15-minute bounce. Engineer buy stops here after market structure supporting. Drops down. Okay, for value gap. Stop goes below. And there you go. But anyway, I'm gonna put my take profit the whole way down below this 15-minute sell side liquidity low because this is what I'm mainly looking at. Now, granted, I am gonna trail my stop into profit should we get an expansion down below here. So as soon as we take the sell side liquidity here, stop loss automatically, absolutely goes into profit. So yes, be that Lee. Now I can say that your stop loss is amazing. All right, but I'm not sure if you're still in it. But yeah, I would just keep your stop where it is now. Obviously. So I mean, we're definitely directional lower as we can all see. Like we're getting very close to this sell side here, and then just kind of bouncing up off of it. And then NASDAQ, like every time we look like we're gonna have a nice run to the downside, like it just rolls right back up, right? So we were able to disregard the bullish order block, but kind of just wicking up off of it now. I would expect this thing to really drive lower and not keep this intact. But like I said, like look how close we got to the lows here, okay? I don't think it would come this low just to not take it. Okay, very obvious run on 15-minute sell side the quarterly here. And then on ES below that, I would simply just look at this gap that's hovering just below it. So the unfilled portion of it, I would view that as a target for ES. But obviously I'm not shorting ES, I'm on NASDAQ. Yeah, I definitely don't like this subtle sensation taking place here, but at the end of the day, we're on a 1-minute chart. But definitely a subtle red flag there. Yes, be that Lee, consolidation expansion. There we go. That's the word for it. So I'm going to go ahead and extend this new week opening gap. Or sorry, I keep saying new week opening gap. New day opening gap. So we almost were able to touch that. I was looking at it and thinking we were going to wanted to see it pierce straight through that, but it wasn't able to. So yeah, honestly, I did not foresee it retracing like this, right? I would expect it to continue towards our targets, but we all see what it's doing here with the rally up. So I mean, this is just a fair example of a high resistance environment. So the run on liquidity was pretty obvious. We got very close to it on ES, so I guess technically we'd be more in profit on ES. So that was about 91. So about 8 handles with the entry that I took was offered on ES. And NASDAQ wasn't able to get as extended, but we're still in it. We're waiting, and we're just accepting of the high resistance environment. And once again, here's New Day opening gap. Missed it by a tick. I really thought I was going to engage it there and slip beyond it, but wasn't able to do so. Man, those birds are active out today, aren't they? But I mean, could they leave this intact for the PM session? I mean, obviously that wouldn't be preferred because I'm looking for it to run it now. But I mean, it's always possible, okay, especially with the higher resistance we're seeing here. But I really can't see it doing anything other than completing the move down here, given how close we got to it and all the moving parts we had coming together for me to have conviction in this trade. Like, it was all there. It really was. Like, we came up, took the buy stops, 15-minute gap, short-term premium priced in. Very, very overall bearish order flow. Come back, short of bearish order, or yes, okay, let me recollect myself there because I lost my words. We come back up into a bearish order block, touch the opening. There's the entry. You have an opposing target. There you go. You have everything you need. Okay. Now, whether it's going to shoot straight down, which every trader aspires for, any trade they're taking, they always want to see it shoot straight down. But in this case here, very much so a drop in volatility at the moment. So ES, very close proximity, right? As soon as, if ES, so let's say ES drops down, as soon as ES takes the sell side liquidity down here, I would sit here on the trade and I would start trailing my stop into profit on NASDAQ because I'm understanding the market will be flooded with orders once these sell side lows are delivered, okay? Come on, algorithm, give us what we want. Come on. So we need to see it really phase through this down candle here, okay, with speed. Not really consider it. All right, so I like how it's spending not one, but 2 minute or 2 1-minute candles within here. So that to me is an initial subtle green flag. I'd like to see that really just phase through that now, okay? Now looking at ES, okay, we're able to lose that down candle and eyes obviously immediately jump to the lows there. So like I said, once the lows are engaged on ES, which matter of fact, let me, hey, you know what, forget the alert. I'll do it the old fashioned way. I'll just flip through and see. But anyway, I like that it's disregarding the down candle. We're spending 3 1-minute candles in that, so that there is a green flag for continuation. Now, granted, we're not really having speedy movement at all since the entry point, but like I said, it should just spike through there. And then we also have New Day opening gap just hovering right below that. So, you know, that's kind of like our magnet on price. But yeah, honestly, like, this is a very rare scenario right here in and of itself. Like, it trades down, misses New Day opening gap by what, half a handle, and trades away from it. That's not typical. Like, if it gets that close, like, it's usually going to spike down into it. But the fact that it left it open, obviously, gives me more conviction that it'll continue lower into it. Yes, getting very close to the lows there. Come on, NASDAQ. Move a little bit. Come on, just move. That's all we want. Like, whether it's going to be up or down, just move, please. So, like, one little trick that I used to do, like, prior to live streaming, like, it's kind of crazy to think about. I've been live streaming for almost 3 years now. But anyway, yeah, so if you guys ever want to find a reliable mentor, simply just go to someone's video tabs and see who's been streaming for years on end. Because, I mean, whether you like the guy or not, I mean, they're obviously going to have some form of knowledge if they've been streaming for that long and showing for live price every day. But anyway, with that said, okay, ES once again got very, very close to the lows there, spiking away. So if I was in a trade on ES, number one, I'd be 10 handles in profit, right? But I would also be, I don't want to say frustrated because it's not a big deal because it's just one transaction, but I would feel a little bit settled frustration with how many times I get close to it and then just, you know, came right back up. So let me go ahead and take this 5-minute for VGAP, and what I'm gonna do is I'm gonna extend this to the right. Okay, so what I'm gonna do here is given the movement we're having, which is not particularly favorable. Like it's just a higher resistance run on liquidity. That's all it is. But you know, I want to see if we can remain below this 5-minute fair value gap. Okay, we can cover outside the lines a little bit, but all in all, I want to see the bodies remain below this, given how much we've worked through it already. And then, I mean, on ES, like, it's hard for me to not think it's going to continue when it's this close to completing the sell side liquidity run that we were looking at, right? So, I mean, this just looks way too obvious. All right, so body initially staying within. Okay, ES should complete the move here within the next minute. Now, like I said, I don't want to see ES stop there. I want to see it, really working this 15-minute imbalance below it as well. Just kind of hanging around here, though. It's back and forth, downward. So 12:34 p.m. So about 20 more minutes we'll be heading into the post-lunch, going into the PM macro. Okay. I don't really have a name coined for it, so, like, bear with me, guys. That's all I can call it for now. Heading out, exiting lunch exiting lunch hour, heading into the PM session macro. That's what we're gonna call it for now until we get a name coined for it. But obviously that'll be 12:50 to 1:10. Okay. But anyway, I mean, just because we're like facing a little bit of short-term adversity and it's like not exactly moving how we'd want, it'd be foolish for me to close the trade given how good the risk to reward is, right? So, if I was sitting here like trying to close a trade just with like little short-term retracements, okay, that's obviously just a psychology problem, right? So, if that's something you're dealing with, that's completely fine because everyone's gone through that phase, right? Like no matter where you're at, but fact of the matter is, one of the best tricks I can give you, which I was gonna talk about earlier, but I stopped. But it's basically just, take the transaction, set the stop loss that you typically set, like not, risking whatever you're willing to risk. Set your TP. Then what you do, walk away from your charts. maybe peek at the live stream, but walk away from your charts. Come back in like 15 minutes, and then see what price has done. Okay, because a lot of times, like when you're in a trade and you're like actively watching it and hovering over it, like a lot of times, like certain price moves would cause you to close a trade or just do something that, like, if you just simply did nothing, okay, it would have hit your TP. But like if you're in the charts and you're just not willing to lose the amount of money that you're risking, right? You look at every fluctuation and like try to trail the stop too early, or go to break even too early, right? Close the trade, those type of things will not happen if you simply just get up, leave the charts for at least 10 minutes, come back, see where your trade's at. Okay, so if that's something you struggle with, that's honestly the best advice I can think of. So now ES continuing this theme here, once again getting very, very close to the lows and just kind of hanging around. So any moment now it should complete the move. ES certainly offered better movement here, so I just can't seem to pick the right average, can I, guys? But anyway, 99799 was the entry relative to NASDAQ, and take profit would yield a little over 10 handles here. So that to me is respectable. And yeah, that's it. So if I was in on NASDAQ, stop loss would be trailed in the profit, but I'm not on ES right now. I'm on NASDAQ. The algorithm's taking a lunch break, okay? Just relax, guys. This is the Joe Biden macro. I forgot that it's running liquidity, so it's just kind of hanging around here. Any minute now, ES should really just spike down there. Come on, ES. I know you can do it. So close to the lows here on ES. Come on, ES. Just flush down there, man. Come on. All jokes aside, like, we're just waiting here, okay? It's just consolidating around the low. It should complete the move. Like, if on an off chance that it doesn't, which I'd be pretty surprised if it got this close to it this many times and not take it. Simply we would just look to target it in the PM session, but I don't think that's the case here today. Okay, there's very specific days, times, and scenarios for that, and I just don't think that is right now. Okay. No, be that Lee, absolutely not. No, that would be concerning. No, my wife is always in there taking care of the baby. So, yeah. So I take care of the family. I'm the only one that works. So very happily I do that. I don't know, man. This is looking very unpromising. Very high resistance here. Just right smack dab in the middle of consolidation. So this is like where like the sped up clips. This is where the sped up clips get a little bit misleading because like you'll watch a sped up clip on YouTube or whatnot. It's like 8x, and you think that's like how your trades are gonna deliver, right? And that kind of gets engraved in your mind if you watch enough of those execution videos. Um, right. So basically that obviously it's not reality. Okay, sometimes you're gonna have trades that deliver in like 2 minutes. Sometimes it's gonna be 15 minutes. Sometimes it's gonna be an hour. Believe it or not, the longest trade I ever held was 3 hours. Okay, and it wasn't even that crazy of a move. It was like 100 points, right? But yeah, don't get the sped up clips engraved in your mind because sometimes you're gonna have to work for it rather than just going straight to TP. So let's see if ES completed the move. Nope, not quite. So we're finally getting, initially, I don't want to speak too soon here, but initially we're finally getting some real movement, all right? Okay, and as we can see here, this was the only execution on the day, right? All right, there we go. So there's the expansion we wanted to see. All right, so I believe ES was able to complete the move. Beautiful. So I'm going to go ahead and trail my stop now since ES was able to get below sell side liquidity. Now, I wouldn't expect it to turn away here on, excuse me, on NASDAQ simply because NASDAQ still has business to do down here. So at the very minimum, we'd want to see, excuse me, I got something stuck in my throat. At the very minimum, we want to see NASDAQ complete the run down into here. So with the given expansion we had and understanding how we spiked into the 15-minute imbalance and the sell side on ES, right? I would simply just cut risk. That's all. So referencing both averages will definitely take you a long way. Now, granted, we would have been a great deal more in profit if we took ES over NASDAQ, but I can't predict which one's going to deliver better on any given trade. Okay, so that's just up to my luck, right? So yeah, granted that we delivered sell side liquidity, I'm gonna put my stop loss at break even. I'm only doing that because sell side was delivered on ES, and as soon as we do that, we wick off. Okay, but I'm still expecting this thing to spike down, and at the very minimum, take sell side liquidity. So it'd be very uncharacteristic to see it not take sell side here. But lo and behold, we get about a handle away from it, and kind of short-term retracement back under this fair value gap. So risk is completely removed. No risk is on the table. And like I said, I explained we had ES run the sell side here. I'm still expecting this thing to continue lower. Okay, this isn't a sustained run whatsoever. I'd still expect this thing to fall. Okay. Alrighty, guys. So we failed to get down to the internal sell stops. We're beginning to have more aggression than I'd want to see up off of that. Like I said, not particularly a sustained run below the 15-minute low whatsoever. See us rallying up into this tiny gap here. Very small. I would expect that to hold price and continue us lower in the direction of the low end of this gap. And potentially even the rejection block down here. Might be a little bit too overzealous of myself, but my take profit isn't down there at the end of the day. It's right down here. So it might come back up to break even here. I definitely anticipated to reach at the very minimum sell south quarterly here. So what I'm going to do here, guys, the game plan basically is if I get any type of body above the 5-minute inversion, specifically the 1 minute, then I would consider closing a profit. But for now, like I said, like it's a risk-free environment. Okay, stops are reasonably at break even, and we're just rallying back up into this inversion. So we shall see what takes place here. Okay, it'd be foolish for me to just impulsively close the trade just because it's short-term adversity, right? That's what I'm trying to dispel to you guys right now, right? What do we do, guys? I'm just a simple, modest man trying to get 15-minute sell side liquidity. So I mean, regardless of where we're at, we're getting very close to the closing macro of the lunch session, and one of two things are going to happen. It's going to inject volatility, or it's just going to keep consolidating. In that case, I would expect obviously the PM kills on to clean things up. Alrighty, where are we at here? Still smack dab into a consolidation. So, like I said, I'm surprised this take profit was not delivered by now, to be honest. But it's just just another example of us getting caught smack dab in the middle of high resistance. So, very well could take me out of break even, meaning I'd just be flat on the day, right? So no big deal there. Even if it were a loss, once again, still no big deal. So if it took my original stop loss, what was the original logic that I displayed to you guys, right? It was a 1-to-4 risk to reward ratio. Okay, say that it came up for the original stop. That's $130 lost. On the contrary, if the other outcome had it played out, right, or still could, that would be over $400, right? So it's a 1-to-4 risk to reward ratio. So you take this, even if, all right, so let's say you take this loss and another loss, and that would bring you what, 260. Okay, you're still, like, even after 2 losses or even 3, you're still doubling the losses that you took prior with proper risk management and understanding what good risk to reward in certain environments looks like. Okay, so I don't know. The message of that story there is like basically just telling you guys always look at everything through the scope of the long term. Never look at one day at face value. Okay, so Brian is taking the good route and leaving this high resistance environment to go to a barbecue. So yeah, enjoy your day, brother. Enjoy the rest of your day. I'll see you tomorrow morning, I'm guessing. So take care of yourself, brother. But anyway, the fact of the matter is, it's not always about winning and losing. Okay, just manage your risk effectively, not going on tilt once you take a loss, because really, like any subtle loss, really is what brings out those bad behaviors that leads into a spiraling down movement in your equity. And if you handle yourself correctly after taking an initial hit, okay, and you manage your risk well, it's going to be very, very hard for you not to be a profitable trader. Okay. Highest of high resistance that is being met here. Now, like I said, I still believe it's likely to continue lower. Okay, if I didn't believe that, then I wouldn't still be holding on to the trade. But with that said, there's always, like, when we're in tight consolidation, there's always a risk of it spiking up to a break-even trade like this, of course, right? So anyone that's currently within this trade with me right now, and you're walking this through with me right now, what even if you don't know it, you're subconsciously learning one of the most powerful things and aspects and characteristics to someone that is actually profitable, right? You're holding on to the trade. You're not having fear, right? These type of things, learning how to do this will serve you well because, I mean, let's be real. You're not always going to have really directional movement, right? You're going to have, stuff like this where you just have to wait a little bit longer to get what you want, right? So delayed gratification. Cedar, absolutely. Amen. Yellen, who is Yellen? I don't think I've ever heard of that name, but I guess we have a impactful speaker coming in 15 after 1. All right. Well, yeah, I'm used to powwow, but if we're gonna get some volatility, Yellen will do. All right. So let me actually go look at it for myself because I didn't catch that. So let me see what we're dealing with here. So if you guys don't know, you should be using Forex Factory. It's definitely the cleanest for looking at economic calendar news. But anyway, let's see here. So it is Thursday. Can't believe it. Time's just moving fast. Okay, yeah. So right at 1 p.m. we have. Wait a minute. It's Thursday, yeah. Oh, 11:15. Oh, okay. That was 11:15 a.m. Ariel. So Yellen, it says Yellen was speaking at 11:15. But at 1 p.m. we have FOMC Barr and Kashkari. Don't know who those individuals are, but we have two speakers coming at 1 p.m. Yeah. So let me go to 11:15. So let's see here. Yeah, I mean, didn't do much. All right, so I don't know what Yellen had to say, but it must have not been too significant. But we do have a couple speakers coming in about 1 minute. So we shall see what that'll do. I don't really think it'll do much given the volatility we've already had, but we'll see. So here's 1 p.m. right now. And they're opening their mouth right at this moment. Getting up to the stand, and we're going to see if it injects volatility. Which I don't want to say desperately, but we need right now. Yeah, exactly. If the thing going into 1 p.m. especially a key time, this thing's really going to be cemented lower. Like it really needs to, like, any minute now it should just drop. Okay. And I'm seeing this low being kind of placed in here. I know that there's short-term stops below here. Why? We obviously have a rather erratic marketplace, but most of the times, normally we're going to see it drop down, match this low, come up off of it. That's engineered sell side liquidity. So once we, kind of drive up, leave this low, okay, that's more sell stops getting stacked below there, okay? So, I mean, one of the most inefficient runs I've seen in a while I've been in a trade, that's for sure. But the logic is clear. We shorted the bearish order block, okay? It's about, what, 40... Say about, yeah, about 35 handles here. And then I'm understanding, before the fact, I was understanding, this potential risk of something like this happening. So, which is why I'd be scaling down. Also, considering that I'm on my main fund of the account, PA. And, I'm just slowly, gradually building that thing up, okay? Because that's how it's truly done. And with the rules and how tricky they are in the prop firm world, if you're using, more leverage than you should, then it's just going to be tougher for you to stay within those rules. But anyway, we got very, very close to this low here. Missed it. Okay, we're just continuously stacking these lows here. Okay, I really just want to see it spike down there. Alright, so I absolutely don't like that rally on ES for leaving those lows intact. Man, oh man, what a run here. So, I mean, very well could rally up to break even, which, I mean, isn't an issue for me, right? Man, this thing is struggling. Absolutely struggling. So I was being optimistic, thinking it was going to drop below the short-term low, but it just stops dead in its track. Boom, right back up, baby. Right back in the middle of consolidation. So this is looking a little bit too strong for me. I want to see that be upset rather quickly. Particularly on Mr. ES here, okay? Yeah, jargon's typically when we have this much volatility in a day, though, we've moved so much. A lot of times you'll see lunch really roll off that steam and continue that, especially when we have the model that we had perform here, right? So trading up, taking stops, first trailed stops, okay, market structure supporting, shorting the bearish order block, and we have a very clear opposing target, right? So whenever I look at this, it's just hard for me to pass this up, especially understanding the tendency for lunch to continue when we have this type of movement in the New York with the volatility. So initially, right at the split second, it was looking too strong, right here, and I wanted to see that be upset quickly, and we did get that. And yeah, I don't like how ES looks, to be honest. So like I said, I wouldn't consider closing the trade. Certainly not unless we, have a sustained run above the 5-minute inversion. So if this thing continues strong like it is here and gets above that with a clear body, then obviously I'd close and profit. Unfortunately, right? I wanted $400, but you don't always get what you want, and you got to submit to the long term and understand this isn't obviously the most efficient price delivery in the world. So, it is what it is, guys. You got to take it transaction by transaction, and like I said, keep looking through that long term scope, and you'll do just fine, right? Manage your risk accordingly. Now, the only stinging factor here is that we would have been hit take profit on ES, right? So if we simply just shorted on ES, we would have been had our taken our full profits, right? At 11 handles, but Nasdaq obviously didn't have that same willingness, and it's just that off chance where we just so happened to short the wrong average. Although the entry model did look cleaner on Nasdaq, I will say, real time it did. So we traded back up above these clean bodies in the 5-minute wick. So like I said, I wasn't going to close the trade unless we got above the 5-minute gap. Okay, that's a very specific reason. And it respects it, trades away. So that's exactly what we'd want to see for continuation, right? Perfect. Beautiful. Now the question is it going to roll right back up, or is it going to actually give us the move that we want now? We'll see. Be that Lee. Okay, so you shorted the 5-minute inversion. I mean, like I said, I'm very convicted in the sell side low being taken. Like, as long as you're, like, let me see. Yeah, I mean, it looks like you're using reasonable, what was that, 5 micros? I mean, that's, you're not over leveraged, you're not having some wild stop loss. So, I mean, if you know what the draw on liquidity is, I mean, I don't particularly say issuing it. Obviously, it's a little bit elevated risk with, how we've moved in the past. So, let's see here. We took the entry right at 12:15, and it is almost 1:15. So we've been sitting in this trade sideways for about an hour now. All right, so obviously not what you ever want to see, but it is what it is in this context. So like I said, is this going to be the run that really drives us below the sell side here, or is it going to be roll right back up, and it chose the route of rolling right back up right in the middle of the consolidation again? They are leaving behind a little barcode here, aren't they? It's the barcode pattern, guys. You see a barcode, you stay the hell out. But anyway, I like the formation of this swing high here on the 15-minute chart. I'd like to see that be cemented and then obviously remain to the downside. So, I mean, it looks like it's going to get below lows again, but, in this marketplace, you can only expect so much out of it. Right back up into the consolidation. So it should leave it. Honestly, it's, what is it, 1:09 p.m. So the technical initial macro of the PM is 1:15 to 1:45. Okay, that kind of either engineers liquidity or just sets up the idea for a setup. Especially by 1:15, we really should drop. But, like I said, we keep going down and then rolling right back up. So, you take it how it is. Yeah, not like this. I've absolutely sat in trades like this before. Okay, this isn't my first rodeo. Okay, I've sat through very high resistance back and forth trades like this many times. I mean, I've been trading for almost 5 years now, so I mean, it'd be pretty hard not to get caught up in this. But fact of the matter is, I've been in many scenarios like this, but I cannot recall any movement like this for an hour following my entry anytime in the near term future. So like, I don't think this has happened in some months. So it's good to be back. Okay, it's good to gain more mental fortitude through a transaction like this, right? Think about it in that type of mindset. So like once again, for the third time, gets very, very close to the short-term low and just cannot complete it. Cannot get below that, right? So I mean, if it just so happens to leave it intact now, which would be crazy, I would just look for it to complete it closer to the silver bullet time window. Alright guys, so once again, here we are, back once more. So look, we're right back up into the 5-minute inversion gap, okay? We keep reverting to that level. As long as we stay below it, I'm still in the trade, okay? If we get above it, have any type of subtle body closure above it, okay, I'll just go ahead and close the trade, not even let it run to break even, okay? So, but as long as we keep reverting to here and respecting it, everything is, just, following the plan. Like, I'm looking at this 15-minute candle here, right? And, like, I can't see any other scenario other than this 15-minute candle just flushing down. Yes, it's kind of hanging around, continuously reverting to this 15-minute imbalance here. So, yeah, about, what is it? So, one more minute, we'll enter that first technical macro of 1 p.m. or just the PM session in general. And that's it. See if we can get the volatility we've been searching for the past hour and 15 minutes. Thank you, Cedar. It's definitely glad to see you back. Honestly, I was like, I had to take a second look. I couldn't believe to see your face in here, but I'm very glad to see you back. You definitely have a good edge over the rest of us here in the group because it sounds like you took a really significant break from trading, so you have mental capital on your side, absolutely. So yeah, hopefully this can be the fresh start you're looking for, man. So I hope you're gonna find what you've been searching for, which I believe you will if you stick by us. But definitely glad to see you back, nonetheless. So I mean, can I really be trusting of any candle within this run here? I mean, I really would like to see this one be the one that slams lower, but like I said, in this market, you're gonna just let it do its thing. Alrighty, there we go. We finally lost that short-term sell side liquidity pool right here. So this right here. Okay. Short-term sell side liquidity. So this like be the moment where I tell you to take a partial, okay, and then hold the runner for the sell side liquidity that I'm looking for. Okay, so buy stop comes in profit now with this given expansion below short-term sell side. Okay, I'm expecting it to continue down to the 15-minute sell side liquidity. That's what I've been looking for. It's what I've been really what this trade was really based on. And yeah, that's it. I'm expecting it to continue down there. Perfect. Alright, so costs are reduced. Automatically stop gets into 20 handles of profit. And, since the first objective has been met. And now we wait see if we can get the full thing. Okay. So we rolled up into this 1 minute for value gap here, right? We'll see it flush down. So it really shouldn't have rolled up like this after taking the short-term sell side in the first place. But like I said, in a marketplace like this, I allow that and understand that's just the nature of price that we're currently within with the order flow. So revert to this 1 minute for VEG up here. Okay, roll back up into that respectively. And now I'd like to see it complete the move down to the 15-minute sell side liquidity. Okay, and we get covered for $400 on a risk. So the risk now is right over $100 in profit. That's what I'm risking, making over $100, right, for $400. All right, so managing your risk effectively was absolutely displayed within this transaction here, regardless of whatever the outcome was. Okay, so definitely what I'm trying to say is the key takeaway is what you're actually learning real time with me managing this trade rather than the actual set amount of profits, right? And there we go. So it should remain heavy there and just complete the move now, okay, for the $400 take profit. Any second now. Okay, stop gets trailed again. And should complete it here now. And, oh, missed it by a tick. All right. All right, I stand to be corrected. Should have done it in the next 5 seconds, but here we go. Misses it by the tick. All right. That's all right with me. I can wait a little bit longer. So we now have take profit trailed 40 candles into, or sorry, stop loss trailed 40 candles into profit. Okay. And we're expecting the move to be completed. So we missed TP by about a tick, wicked off initially, and just pretty much waiting on it to complete it now. So come on. So I'll put it above this up candle here. Wow, so I missed our take profit by about a tick there, so should, just flush there and complete the move, but, just waiting on it. So ES back into the 1 minute gap there. So definitely was not expecting it to miss it by a tick and roll back up. I was expecting it to complete the move in that split second, but like I said, we continue to wait and understand that liquidity is still on tap, and that's it, and we're, profitable nonetheless. First runner, not a problem whatsoever. That's what I do. All right, Quintamilius took all of his profits, so beautiful. Good on you. Good work, brother. Wow, so yeah, nothing I can do about this guy. So it missed our TP by a tick and is completely just displacing above. So only so much you can do about that one, guys. So we waited about an hour, 15 minutes, gets a tick within the profit, or TP, and aggressively wicks off. So, like I said, only so much you can do about that one. But, fact of the matter is, it was a profitable trade. We remained disciplined, and, we held it. But, yeah. Wow. Would you look at that, guys? Let's see if I can complete it now. So we rolled back up into the 1 minute gap as well as the up candle. If it's going to complete it now, that would absolutely hold and send it down. So 1 tick was the difference between where price dropped down to and my take profit. So I gotta keep saying that because it's madness, right? Yes, we are. So long story short, we finally get the movement we were looking for. It expands deeply, right down, and misses our TP by 1 tick and displaces away from it. So we're yeah, gets 1 tick within TP, trades away, and unfortunately we're still waiting on it, even though it should have just flushed right to TP. But fact of the matter is, stop losses above bearish order block and fair value gap, and looking for it to complete it down here. So man, Nasdaq is an absolute villain today. Did the regular Nasdaq get below the low? Let me see something here. Nope, it didn't. It missed by a tick as well. So I mean, I'll be content with $200, which if it comes up for the trailed stop, like obviously that'd be $200 in profit, but I very much so would have preferred it to just get a tick lower and reach the take profit. But I guess in a marketplace like this, man can only ask for so much. But fact of the matter is, I mean, this is the only trade of the day. We're profitable nonetheless, and if you're profitable on any given day, you guys know the deal. You're in the 5% automatically. Okay. Because the fact of the matter is, most lost money. Okay. Not that I'm preying on that and want that to be the case, but it's just simply the reality. And what can you do about it other than share your voice as much as you can? So I mean, kind of stalling here. I mean, I don't really respect this down here. I'd like to see it sweep that, but doesn't look like it's gonna do it. This was definitely the most interesting trade that I've taken in a while. Just because of how it delivered, and then you get this at the end. So like you get a giant, like slap in the face at the end of it after you wait hour 15 minutes, right? Um, anyway, what can you do here, guys? What can you do? What can we do? Man. All right, guys, this is what it is. I'll take the $200. Okay, there we go. I'll take my $200. All right, I guess. I was looking for 400, but misses TP by a tick. But I'm grateful that I can get in here and make money nonetheless. But all right, guys. So long story short, I was live streaming with my members, and we took a lunch macro short. Right, we were able to profit almost 50 handles. Very respectable, and I closed up stream not really anticipating too much to go on following that because we had 3 very volatile sessions in a row: the Asian session, the London session, and now New York. So wasn't expecting too much to take place. Which was why I closed the stream up. Right, immediately after that, about 10 minutes after to be exact, I find a textbook repeating phenomenon in price that I absolutely can just not pass up, and I'm buying in here at the high of the breaker, and there's a balanced price range to the left side of the chart that you can find on the 5-minute chart, and looking to get covered looking to get covered at the buy side of the quarterly resting above here. All right, so I'm watching this short-term high right up here to the left side of the chart. So if I zoom over real quick, you'll see this high here. And now we just sit here and wait. So I'm not going to aggressively try my stop up here now because I know there's always a chance for some type of retracement to run a short-term low and then continue higher. Do I think that's going to happen in this scenario? Not particularly, but I'm willing to weather that retracement. So in this case here, we're trading up, and once we engage the short-term high that I showed to the left side of the chart, I'm absolutely going to move stop loss right up to break even. All right, so that is the scenario on that. Okay, very reasonable retracement in price here. Okay. This right here, this down candle, this will be our classic bullish order block. So once we're trading back down into that, I view this as reaccumulation of longs and send this thing higher up into the buy side of the quarterly. Okay. Now, would I, you could say, well, isn't this a point where you'd want to add more contracts on? Well, not in this context here. I'm already profitable on the day, live on stream, and I'm coming in here taking another transaction, right? Putting profits at risk. So I'm not going to sit here and try to scale up from the previous trade. Okay, that's just foolish, and that's another form of bad risk management. So we should see a rather large expansion, and we should see the buy side liquidity delivered within the next 5 to 10 minutes. All right, so given this expansion to the upside, I would not want to see this low ran out because we worked in the breaker reasonably. We respected the balanced price range. We left it. If it's on a mission to get this buy side liquidity, it will hold and remain above and obviously complete the move. So leaving my stop loss here. I'm not going to jam below the first, the nearest term swing node to be formed. That's foolish. But absolutely costs will be cut and my stop loss will be relative to break even here. So stop loss just above entry point, meaning that risk is completely removed, and we're just going to wait to see if this take profit, well, not a matter of if, it's a matter of when this take profit will be hit. Okay, so another expansion above this swing high here. I expect it to remain heavy now at this point. If my stop loss wasn't already at break even, okay, it would be now, absolutely. Getting very close proximity to that first level of buy side liquidity to the left side of the chart, and obviously you guys can see the terminus, which would be the main target where my sell limit would be rested at. So this is kind of the point where you're within that gray area where it's like in between your take profit and your entry, and this is where you really expect large expansion, okay, and you don't want to really see sustained retracement. So if it's going to be a low resistance liquidity run, this is the moment where it would really expand deeply to the upside. Okay, so I'm watching it drop down to these two down candles here, anticipating that to hold price as a form of reaccumulation of longs to then send it higher. All right, so it just dropped down once and then it dropped down a second time, so that is perfectly reasonable. But if it were to come down here, leave it, and then drop down to it a third time, that to me would be a subtle red flag. But if we're trading into it twice, that to me is completely normal and just fine. All right, and there we go. There's that internal buy side liquidity book. So what I'm going to do here is I'm going to go ahead and trail my stop up into profit. So regardless of the outcome, let's say that it comes down for stop, that would be over 15 handles for take profit. Okay, so now we're going to allow it to engage the buy side up here. So I like this large prominent candle here. I'd like to see this remain strong and heavy to the upside and just complete this, what has been a very nice and clean run on buy side liquidity. So getting very close to it here. Any moment now. So we just came up and matched that buy side liquidity high exactly, and now initially trading off. So anytime I see this, I honestly just view this as engineering more buy stops above that high on a short-term basis. So as soon as we reach that key level of buy side liquidity slash high, right, a lot of times they'll kind of pull the floor out and just allow it to retrace a little bit, and by default a lot of sell stops get trailed above that high because they view that as resistance, and when the time is right, they just shed it right straight through that liquidity pool. Okay. So any moment now we should see this move completed. And there we go. Trader is paid. So that is about 75.5 handles right there. So I hope you guys enjoyed this one. Take care of yourself.